what usually happens today is without any insurance, people go and try to self-fund through reverse mortgage, which could be a really great option if you're not afraid of taking on risk. Like you have enough buffer and you don't want to feel constrained by how I could be using my insurance policy, where can I be using it, which are real limitations. The other option is what we call partial insuring, which is you have some, maybe your long-term care is going to cost $375,000, and you get a policy, insurance policy for that has 200K coverage. So in that case, you're like, okay, like I want to do that because, I have a guarantee of what that ARR is going to look like to purchase that policy. But if I were to self-fund and I assume like how I'm investing it, I assume a certain ARR, but you can't guarantee that. So a lot of people like to choose partial insuring for, optimizing for, being more immediately liquid while having some guarantee of like returns for this particular event. And the third option is just fully insuring in some way, which is like, we may tell you like through the software that your long-term care is going to cost 275. And you might decide, okay, I'll pull out a 400K policy because what's most important is protecting myself against, the unknown sort of ARR of like putting my money into the market instead. So this is definitely not investment advice, but that is what I've seen advisors do. And we actually have that calculated. And I'm sure, I think once you get a number out from us, then it's a matter of picking one of those three funding strategies to keep it simple. So you decide, okay, if I want to self-fund, what vehicles? If I want to partially insure, what policy? Because there's different types. There's ones that are asset based, which is a long-term care, like a life insurance policy. But if you start having long-term care needs, some of them have what's called a rider, where you could start to pull some of that death benefit as long-term care, like as coverage for care, but we can't officially call it like long-term care coverage. So the insurance space has a ton of options. It's easy to get overwhelmed. So it's better to simplify your strategy and say, well, what do I care about? Do I want a guarantee on my ARR in some way? Or I want to maximize like the risk for potential like outcome. So it depends if that's helpful.
That is very helpful. I'm glad you bring up the insurance part. And as you mentioned, a lot of people are just scared to even consider it. If for those homeowners out there, you have homeowners insurance, and the chances of your house going on fire are 1 in like 1,200. You have car insurance. I know it's up over 30% since 2021. So some of us may not have car insurance, but most of us have car insurance, right? And the chances of you getting into an accident are also 1 in about 800.